Hi guys, this is Matt Z from Optimus Futures. Today I have a very good and interesting idea for you. And the idea is that you are actually going to score your trades. So you're actually going to give every trade that you do a score or a grade. And we're going to talk about how to do that. And the second thing that I would tell you after we learn that is also encourage you to create your own scorecard. So the idea of a scorecard is basically that you start to rank your trades. So not every trade is equal. So you have some trades with potentially, I should say the word potentially, and again, past performance is not indicative of future results, but you have an idea right now where you basically give every single setup that you have a score. And the way to do that is, first of all, to have the right factors. So I'm going to use a simple example here. You will add your own variables as necessary. So the first thing is to have a technical score, right? So it could be based on support and resistance, or it could be a chart recognition like a wedge. It could be something statistical that happened in the markets, or anything that basically repeats itself over and over and over again, and you can score it. Right? And you can give it a score of 1 to 10. The second thing that you want to do is to score it based on the risk that you have to take with the trade. So, for example, there's some risks that you might say that it's X, and some trades, the risk is 2X or 3X or 4X. So basically, you have an idea at what point the trade does not work out anymore. And you rank that as well. The third thing that you rank is the reward. So basically, let's say if X happens, then Y happens. You don't know what the market will do. But essentially, what you want to do is have some sort of an anticipation of the reward that you should get out of it and score it as well. So let's go through that, for example, okay? And again, before we do that, I have to tell you that there's a substantial risk of loss in futures trading. Anything that I'm telling you here is just potentially to help you. My vacuum cleaner started working. Is that the computer? Okay. I'm going to continue. I don't care. It's computers. Anyway, so it will quiet down. The computer does its own thing. So where were we? Okay, so technical side. So again, you score the things technically. Let's say you have some sort of a setup and you give it a score of 1 to 10. And let's say you give that specific pattern an 8. Now you have 8, right? So let's say the total is 30. That's what you have to do. You give it an 8. Now let's talk about the risk. Let's say the risk is really low on that trade. And again, when I say the trade risk is low, we don't know what the market is going to do. And even if you have a stop loss, it could gap and such execution might not take place. But you still have to score the risk on it. So let's say the risk is very low and you give it a higher score. If it's better risk, let's say you give it an 8 as well. So now you have an 8 out of 30, right? You have 10, 10, and 10. So you have right now 16. Let's go to the next one, which is the reward. Let's say that you expect 3x reward, and that's a 10, right? So now you have 8, 8, and 10, which is 28 out of 30. And that's a good trade. So you want to take this trade. Let's take an example of a trade that you might not want to do, okay? So let's assume that there's a perfect setup, right? Let's say the market bounced off some sort of a support level for the 4th time, and there's a likelihood that it will go up, right? But underneath that support level, there's a huge gap that could be filled. So let's say in terms of the technical side, now you give it a 10. In terms of the risk, on the other hand, it's very high and you give it only a 4. And the reward when it bounces from those levels could be not very significant, so it could be a 7, right? So you give it 10, 4, and 7, and now you're at 21, right? 10, 21, and now you have to decide, is that the level that I want to take a trade on? Now, if it's a risk, reward, and technicals which go to, let's say, 15, maybe you don't want to do that. Now, in past discussions, we talked about fixed and variable trading. So basically, when you have better setups, you want to trade more contracts. And when you have not so good, you might want to minimize. And when you go through losing streaks, you want to minimize your contracts. But essentially, that's one way to score whether you want to take the trade and at the same time also decide on the quantity. So let's say you decide that every time it surpasses 25 in terms of out of 30, you basically will trade 2 contracts. And if it goes below 20, you're not going to trade at all. And anything between 20 and 25, you will trade, let's say, a single contract instead of 2. Again, based on your risk capital, your experience, this is something that you want to consider. Now, there's another option here, scoring it also that, but giving it a weighted average. So a weighted average is basically where you also score it 1 to 10. So your total score will be a 10, but you do it in a weighted average method. Let me give you an example. So let's assume that the technicals only count for 25%, the risk management counts for 50%, and the reward is 25%. So you score the first technical and you multiply it by 25%. Then you have the risk and reward, the risk side, and you multiply it by 50%. Why 50% on the risk side? I would argue that the risk is the one component which is, regardless of the setup or anything else, you have to look at the risk first on every trade. Those people who look at the reward first versus the risk, in my opinion, are in the initial stages of trading. But experienced people, they work more with the risk side. They always look at the downside of the trade. So again, the technical would be 25%. So you multiply it. You choose 1 to 10 multiplied by 0.25, and then you choose the risk side, and you multiply it by 0.5. And then the reward you multiply by 0.25, and then you add it up, right? And then it should give you a score of 1 to 10 on those things. And that's a weighted average. Now, you could say that your technicals are only 20% and your risk and reward are 40 and 40%. So then you have 100 as well. So I leave it up to you how you want to do that. But essentially, you have a weighted average build out of your risk profile of what you consider better for your trading. Again, I don't think one method is better than another, but essentially now you have a scorecard. Now you don't just randomly decide, I think this is a good trade or I think this is a bad trade. It's very hard to calculate all those things initially when you start working with them, because you have to assign numbers. So you're like, I don't know if I should do 3 or 4, or this one is 50%, maybe it should be 55% on weighted average. I leave that up to you. You have to think about it, but over time, you will get used to having a risk method that is quantified. And that's the idea over here. You quantify things, you don't do things randomly, because trading is extremely risky. If you have a question about this, please go to community.optimusfutures.com. Ask me about it. I'll answer it. I'd love to be your broker. Come to optimusfutures.com. We have many clearing firms that we work with. We have all the software and the platforms that you need, and I'd love to accommodate and earn your business. You can always call us in North America. It's 1-800-771-6748, and local number for overseas is 561-367-8686. We're in Florida. We're in Eastern Time. Look forward to hearing from you, and I hope this podcast video was very helpful for you.